Hello and welcome everyone to the weekly Delphian meeting. Thank you for tuning in. So today we'll go through our market update, our earnings update, and then Joe's going to talk about earnings and have some charts. So let's get started. So overall, the indices pretty much same, 1-1, SPX 1, Russell 8. So no change there. The pie is actually really close to where we were talking about it last week. So we're at 40 and, we're at 40 there. So no big changes overall for the market. So let's take a look at the market pulse. So you can see last week, we had about 60% bearish. We kind of peaked right there on May 4th, Thursday at 63, and now we're back right around 60. So not a ton of movement. The market moves quite a bit. Jumped on that day there, but pretty much staying in our trading range. I know it's pretty boring as we go through this, and it's pretty much staying in that range that we talk about all the time. But that's what the market's doing. I don't see any kind of impetus to get out of this in the near term. So, we'll have to see if we can get some upward momentum on these bullish numbers, or if we're just gonna kind of go sideways here. Nothing big overall. This highs and lows. So we had that pretty big day back there. Let me pull it back, get perspective here. So we had a decent day on the 4th, but nothing significant really. This 400, 300 here, but nothing, like our big numbers that were happening on these big downturns. So pretty quiet, just a little bit of tremors, you can call them, but nothing significant. Nothing really changed here on our 200-day moving averages. Let's look at the states here. Ones and eights. So last week we're at 44, we're at 44. So pretty much, I mean, if you look at the price up there, 410.84, 410.93, we pretty much went exactly sideways in a week. Sorry. I was looking a little more, as far as breadth, we're getting a little bit of movement out of the sevens, just a little bit over the last week. So that, a little bit of a bullish sign. Obviously the fives are nothing. The twos have dropped, those twos have pretty much gone back to ones. So, what we really need to get some kind of bullish rallies, these eights to start going into sevens to fives, and fives to ones to get any kind of bullish rally. So just a little bit here, but nothing significant at all. So that was it for Market Pulse. And here's our sideways S&P 500. So you can see the high, still that 41.86. The top of our range is at 4,200, bottom 38. So near the upper end, but haven't really tried to break through it. Still sideways. So really kind of the key is, staying above 4,100. And, if we can break through 42, very difficult at this point. Let's take a look at the chart. So we'll do our lines here. 42, and then there's our 38. So, like I said, before, we've had a couple of tests on the 50-day, so that's a good sign so far. We'd need that to continue and to break through 4,200 to get bullish on this market. But two signs here: the test on the 50, so that's a good sign. Overall bullish wise, but still not sold that this is a bullish market. So we've had kind of tests before, where it's eventually turned around. Here's trying to act like support and then flipped over. So just kind of a inkling that it's showing good support. But the big thing here is we're not getting market breadth. And that's just looking at our our state sevens. We see these big move overall, and there's not a lot of participation. That with SPX in 1, the Russell in 8. The other one I was looking at, this one, RSP. So this is the S&P 500 equal weighted. And if you pretty much just kind of click back and forth, this is the Russell and this is the RSP. They pretty much look the same. RSP is in state 8 and pretty much mirroring the Russell's moves overall. But you look at the S&P, it's above the 50, it's above 200, it's in state 1. This one's below the 50, slightly below the 200. The Russell's well below. So it's just pretty weak overall breadth in the market overall. So we'd need to see some more participation. Like I said, those 8s moving to 7. Otherwise, I don't think we'll get above that 4,200. So let's look at the Russell. So similar, we're right on entry level, well past the average days. So we're at 39, average is 28. The low we did hit right below that 1,700. But it immediately bounced about, and came roaring back, to kind of to the midpoint 1,800, and it's been just meandering between 18, 17. Our range is 19 to 17. But that 17 is held, so that's been a strong point. We'll see where this, if we can get some market breadth, this would. Obviously it's not going to challenge that 1,900 anytime soon, but the S&P, that one is getting close. It's in the ballpark of 4,200. So that's kind of the upside, and then the downside lower point's going to be that 1,700. And you can also look at the 50-day for S&P, so that's 4073. So see if that holds near term, to the downside. So, this Russell here, staying kind of range bound, there's not much to say on this chart. I'll do the big one. So here's our 1,900 and here's our 17. So 17's held, just continuing range bound and kind of lower end of the range, SP's upper end of the range. So we'll have to see if we get some more market breadth. This is a good one to track. I've used it a lot, but just kind of saw it and I was like, oh yeah, the equal weighted S&P. So RSP is the symbol. I think it's a decent one to watch. Okay. was going to pull up 10-year just kind of real quick. This one's been, volatile as usual. Pretty much just like that 3.5's been pretty much like a magnet for it lately. Gets up above, turns down, up, and so that 3.5 is pretty much like a magnet of where it's been like going to until things change. But pretty volatile. These moves, got down to like 3.3, came right roaring back. So a lot of volatility in the bond market as usual, or not long-term usual, but since they started raising rates here. All right, let's look at the Fed. Obviously, this is important. So now, next meeting, they're pretty much saying 95% for no hike. Small chance of a hike. That's it's changed over a month. You can see down here they had a quarter, 25% chance of a cut. So pretty much right now they're all saying no cut for June. Similar for July. The majority is here with a little bit saying a cut. So they're saying basically what they're saying is no cut, no cut, one cut, quarter cut, quarter cut, quarter cut. Just to kind of summarize, do it in a little quicker fashion. So, that's the base case. It hasn't changed that much. The percentage got, you can see last month is 35 for, 3 cuts by December. So now it's getting a little bit stronger, a little narrower on the range. So pretty much right now, market's saying there'll be 3 cuts by December. And we know Fed has said no cuts this year. So let's see.
I think the market's factoring a debt ceiling crisis.
You think?
I think that's the only thing that causes the Fed to cut is
well,
and I think these guys are really far apart.
Yeah, I mean, it's just so many. It's hard to think that would be a possibility. They've come
it
so
happened
many
before. Happened in 2011, so it's not like it's never happened.
Right.
It did happen. Where they shut down the government for, I think it was 6 weeks.
Right.
So
I think we're all better off during those 6 weeks too, by the way.
Say that again.
I think we're all better off during those 6 weeks, when they shut down.
Yeah. Well, I don't know if you're receiving VA benefits or stuff like that.
I was joking. That was a joke.
Yeah. So I know you were being facetious about the government, but the market dropped. We got downgraded. The market dropped 15%. I just don't. CPI was good today. It was lower.
Yeah.
So all the data is coming in exactly like the Fed wants. So there's nothing that's going to cause the Fed to lower rates. But if the market thinks they're going to lower rates, the only thing I can see is that they don't resolve this debt ceiling thing and we go into a government shutdown. And that would be a problem.
Yeah. Well, the other thing I see is, if there's a, banking crisis, like if the contagion spreads,
True.
and more.
True.
Yeah.
That's a good point.
That's kind of like the big one, I think, out there, the banking right now. Yeah, I mean, it's just hard to fathom they would do that, but it's definitely a possibility. Speaking of that, you brought up M2, and I showed you guys this one in December. So this was the December, and this is like a 16-month lag. So here's the updated chart. So we went from here to here. So the CPI is, should be following, the M2 change, and we're negative in M2. So I think that's, helping with this whole inflation thing. And if this follows all the way down, it's going to be, at some point, we could have deflation, if it follows this to a T. And it matches pretty well, but, it's not exact, but something to think about, a good chart to look at. And, it's pretty much held true to, what we originally looked at back here. It pretty much comes straight down like these. So
Exactly
definitely,
what the Fed wants.
yeah. I mean,
Their policies are working as long as Washington doesn't screw it up.
yeah, and as long as the banks don't collapse. Yeah. I think they're still on a tightrope. This definitely made me more bullish on, seeing this type on the, like a soft landing type thing. I still think it's a, overall positive, against inflation, but the rates being so high, that I'm just really concerned about the banks. And these things just, pop up and all of a sudden they're insolvent, and we went through those articles, like half the banks are insolvent right now. I mean, they get into like liquidity crisis, they have to start selling things. And I mean, the contagion could happen real fast, they're so like interdependent, a lot of these banks. So that is my biggest concern right now, obviously.
Yeah. The other
So,
thing,
mhm,
if you look at CD rates from solid banks like Wells Fargo, all that, I mean, they're getting up there 5-6%.
yeah,
And, it's more advantageous to put your money in CD and bond ladders that mature at different times
yeah,
than it is to take on risky stocks.
right,
So the price people are willing to pay for stocks is, becoming less and less.
right,
You know, and I think that's one of the reasons energy stocks pay excellent dividends. But why would you buy a stock that's paying 4% and you have downside risk with the stock when you can just get CDs at 5-6%?
right,
So
yeah,
the price that people are willing to pay, the multiples people are willing to pay, has to come down as these, more and more of these high-paying CDs become available, which has not happened in, since 2008 or something. You couldn't get this you haven't been able to get this kind of safe return on CDs in what,
yeah,
12, 13 years?
yeah, definitely. Yeah, I mean, we talked a lot about that last week. Just where's the capital going to go? Risk-free return of 4-5%. We talked about moving it from a checking account. I mean, that's like a no-brainer, right? But yeah, I mean, the bigger picture is stocks and what's the possible return, possible negative or positive, with dividends. And I think obviously like longer term people probably still be more into stocks, if they have a long-term horizon. But if you're shorter term or risk adverse, yeah, you're pushing your capital out, out of the market, especially after it's had such a great run, and you're finding nice 4 or 5% with pretty much no risk. And same thing goes for like real estate too. I mean, the cost of capital, real estate's gone up significantly, and the cap rates are below what you can get risk free. So I mean, logically, people would be pushing a lot of money into this risk-free or very low risk, high yielding stuff. It's good points, Sadir. Okay. Yeah, so I'm still, yeah, I don't know what's gonna be. I guess they're saying, either inflation's gonna be coming down here. I mean, this is like an ideal, um, you know, way of, things playing out ideally. It's like, okay, inflation's coming down, we're gonna start walking down rates. So this is kind of like the ideal case, and if it deviates from that, the market's gonna react. But I mean, it looks like inflation's coming down, it looks like they're doing their job, and we just have to watch the bank, see that they hold. Oh yeah, I pulled this up too. Joe had a great question last week, so did some research and found the number of commercial banks versus every other country. So you can see all the other commercial banks in the different countries, and there's the US with 4,200. That's a lot of banks.
Looks
So,
like we're ripe for consolidation.
yeah, and maybe let some of the losers fail. Wouldn't be a bad idea.
From the looks of that chart, you would think from an international point of view that the U.S. banking system looks like it should be pretty well diversified.
You would think. I don't know.
Yeah, surprisingly, probably it's not. Yeah.
Yeah. Well, if they're all doing the same playbook,
Yeah, that's my point.
Yeah. Anyway, interesting chart. I never knew it was this, this big a difference. So, and I mean, this number's come way down. Like it used to be a lot higher. So, yeah. JP Morgan's trying to drive that number way down. We know that. Okay. While we're talking banks, banks are tightening credit. So this loan officer survey that they do. So percent of banks tightening credit. So you can see back here. I mean, look at the freaking the swings going on here. It's crazy, but obviously not pandemic level, but pretty high. So that's going to be a hindrance to the economy overall. So just want to put that one out there too. We're not in good territory as far as bank lending. And the last one, this is kind of throwback. US Tech versus S&P. So this one goes all the way back. But we've been well above, this kind of 2 standard deviation line for quite a while, but we are overcooked overall. But you can see back here, .com bubble. I guess this is 70s. I don't, that's well before, that's before I was born. So I don't know what was going on there. Joe, do you have any idea? I think this is like 1970 range. Maybe
What are you
it's
saying,
like
Josh?
it's the same. You have more a longer timeline than I do.
A little more wisdom, huh? Nothing more than the Vietnam War. You had the oil embargo. You had talked some time ago about I don't think it really relates here, but coming off the gold standard in 71, I don't think that would impact it. So
yeah. I don't know that first chart blip too well, but we all lived through that .com. We know what that was about. So I don't know. I'm kind of surprised we're still up here. I mean, I see a lot of these, like especially like pandemic things that went crazy, and now they're back down to earth. Like Spotify, like a lot of those names have like really been hit hard. I would be surprised, that we'd be up this high, but
But, one thought that comes to mind, Josh, that's totally different from the late 90s, .com, is that, a number of these companies are now actually making a ton of money, where, in the late 90s, it was just total euphoria. So it'd be interesting to see, the level of earnings versus.
Yeah, that'd probably be a better relative analysis. I mean, you got Apple alone, probably propping it up above this line. I always thought
Going back to the 60s, real quick,
Mhm.
have you heard of the Nifty 50?
Mhm.
You familiar with that term? Yeah. So I don't know if that was part of it. I mean, certainly not just tech, but that drove the markets in the late 60s.
Yeah. Yeah, the Nifty 50, I've heard of it. Okay. Yeah, so I mean, we got basically what does tell me, we got, till the end of the summer, till they think things are going to start happening, Fed wise. So, we'll have to, keep an eye on inflation reports. The ones came out, core inflation pretty much in line, regular inflation in line, pretty much nothing there, right? Nothing burger. So it's not going up. So I guess it's a good thing. So, we'll see if, this M2 or CPI, this correlation continues down. I think it could be, a good thing overall. We want to see inflation coming down, but, I did see another thing about, like rents. They think, rents have peaked. So, I'll keep an eye on that. I saw a good chart. I didn't send it to myself, but I saw it this morning. So, rent's a big driver for the inflation. So, if that's peaked and rents start coming down, that'll be a really, good, drop for inflation. So we'll have to see if they peaked. But on the other, other thing here, as far as money supply, the Fed obviously doing a pretty good job. This is a lot steeper, than they've done here, but they had the big spike with the bailout. So, dropped another 60 billion. They're working their way down. Fed's doing what they're, what they said they would do. So, they're shrinking the balance sheet. Money supply is coming down. Rates are high. I just, believe them at their word, so if they're saying no rate hikes, then, no rate cuts, then that's what I'm believing right now until, until I hear otherwise. So that's where I differ with these people. So maybe they know something we don't know, but yeah, we'll have to see. All right. I think we're good. Any questions, comments so far? Great questions and comments.
Hey, Josh, Dan here.
Yeah, hey, Dan.
Hi. Do you still have that chart you displayed a while back that showed the when the market tanked after the Fed pivoted?
Oh,
Remember
yeah.
that chart?
Yeah, it's gonna be. There we go. There we go. You got it.
Okay. I can't help but look at that, and it dampens my euphoria for any pivots.
Yeah. Yeah. It's always good to keep in your head. Usually they pivot after some breaks, right? So I mean, if we think it's going to be a nice soft landing, then, the pivot wouldn't do this,
Yeah,
but usually it's not the case. So market's pricing in a nice soft landing. So
here's hoping.
yeah. But once they pivot, obviously be on your guard, right?
Yeah, yeah,
I mean, I think at that point we'd know what's going on, why they pivot. Right now they're saying they're not pivoting, so that's a good sign, right?
yeah, yeah.
Um,
I appreciate that. I just took a screenshot of that.
yeah, sure. Okay. Thanks, Dan.
Thank you.
All right. Anyone else? Questions, comments? Nope. Okay. All right. Let me pull up the earnings. So earnings have not been great, not gonna lie. So bullish pre-runners, and I think we're done with these. We're down money. I think I closed out the last one I saw. I didn't check if there's any more, but basically we had, down basically 1,000. The last one we closed, I think it was LNC right here, 5.9. So that squeaked out. The big one was this Chilean confiscation of lithium mines. That one got killed.
That was real
That,
painful.
yeah, that's a bad one. I don't think anyone saw that coming. But other than that, I think it probably would have been break even outside of that one. So still not like a banner quarter, the oil. So obviously not a good quarter for bullish runners, which is rare. I mean, the last like 3 quarters have been like 96% win rate. So sorry about that. You got your one bearish pre-runner as a winner. Bullish runners, that's still in full swing. Down little bit of change here. This one's probably the biggest loser. Quite a few open, 10 open. We got 8 that are closed. So we haven't closed out any losers yet. Knock on wood. Hopefully that this can turn around. But 8 of them, all those have hit their profit target. So we still got 10 open, and we'll just keep watching those. Hopefully those get above water. That would be good. Bearish runners. So we got one close. These are, not doing a lot. This one, T-Dog closed for the full profit. So we got 2 open there. Non-movers. So we had 4 open there. We had 1 close out recently. So we still got 3 open. I think we got
Marriott closed today.
Hmm?
Marriott hit the profit target today, intraday. My
Oh, nice.
live order closed, so I assume yours will at the end of the day.
Maybe.
Yeah.
I only get a snapshot. That's why I always say, like, put them on, and so you don't have to watch it. Well, that's good. these ones closed out fast and NXPI. So you get nice money from these, if they hit your profit target. The risk reward on these are great. You can see like max risk, 1,000, max profit 2. So it's pretty much like 2 to 1.
I love this iron butterfly concept. If there's more areas where it could be used, that would be interesting because, like you said, the risk reward is so nice on these.
Yeah, compared to everything else.
Yeah, like if there was some other screen that generated these are very good.
Yeah, yeah. Well,
Like I said, Marriott closed for profit for me today on a live trail, so
that's
there
awesome.
hasn't been a loss yet this round.
Yeah. Yeah, I mean, your only problem here is if it gets outside the bands, obviously, but you got some time, for these to come back too.
But the one of the things you can do with these that everyone may be interested in is, let's say you want to do $1,000 of risk and get $100 Well, you want, for a bull put spread, you're going to have to get $1 credit, and that gives you $4 of risk for a 5 wide credit spread.
Mhm.
But to get the same, if you do it by constant profit, if you still want the same dollar of profit, you are only going to take on about $1 of risk with the iron butterfly. You follow what I'm saying?
No.
So to get the same return, you take on much less risk with the iron
Right.
butterfly.
Right.
So you have a couple of choices. You can say, okay, I'm taking on much less risk. I'll buy 10 iron butterflies, and my risk is the same as the other trades, but my potential return is huge.
Mhm.
Or I keep my risk, I keep my return constant. Let's say I want to get $100 per profitable trade, and now my risk went way down.
Right.
Yeah, I don't know if all that made sense, but it's a very interesting trade, this iron butterfly.
Yeah. Well, I mean, if you're doing like a, bull put, you can't get this type of risk reward, right? You can't get more max profit than the risk.
Yeah. So
Like
that's why if there's other places where in Delphian where this can show up, it can be very interesting.
yeah. Yeah, I mean, I think this would be a good idea to try and find like a systematic, like daily trade. Basically you look for something moving somewhat sideways, right?
Right.
Yeah, I mean,
And
you
obviously,
can't be.
Josh,
Go ahead, Joe.
we sort, based on liquidity. So of the whole universe that's out there, we're looking at only about 350 numbers. So, we could widen that as well.
Yeah. Yeah, these can definitely be, really good trades. So, okay. So this one's helping, the overall picture. So let's just hope the bullish runners, and the non-movers, carry the day here. So, all right, that's it on earnings. Any questions, comments?
Hey, Josh, it's Lee.
Yep. Hey, Lee.
Hey, what about our daily trades? Do you have a feel how those are generally going?
I have. So what I'm doing right now, I had our programmer go back to 2018 and publish all the, like, clean up everything. So I'm going through basically, all our strategies since 2018.
Yeah.
So I'm gonna have like a year by year for all of these.
Uh-huh.
It's gonna take me a while to do that. Probably a couple weeks to get through all that, but I have like current things. So like this is like the 10-year. Let's pull it up. So this is started basically right near the market top, right? 9/27, 2021. So
Uh-huh.
this one's up 19 and you got 6 open, one profitable. This one's probably gonna be a loser. Um, but of all the trades here, I haven't done a quarterly update because I'm working on the big update. So I'll have like a year by year since 2018 for all of them, just with the bull put. Like we pulled all the other stuff, just not to confuse people.
Right.
If here's a bullish trade, you can modify it however you want, but um,
Okay.
the most of them, I mean, you can see, it's mostly pretty good, little spats, but they're pretty much right near their typical like win rates for most of them. Um, Keltner's done well. We haven't had a lot of like these 1 year, 5 years because the correlations have broken down.
Mhm.
But like Keltner bottom, you're getting more of the bottoms here too. So uh, they've done, they've held up. They're not, I don't think any of them are down money, for the most part. Keltner bottom. This is the newer one, the Keltner channel.
And Lee, one thing Josh and I were kind of joking about the other day was when we come out with bear trades, because as Josh pointed out, most of these portfolios started very close to the market top. And, despite them being bullish trades, they've been pretty successful. We were joking that when we come out with a pile of bearish trades, it'll be a significant market bottom.
That'll be the bottom.
Okay.
Yeah, so like, I mean, this one is pretty high volume. It's just, using the Keltner channel. So, since it's almost a year old, it's up pretty good. But if I click on this, it's going to take a while to load, but you can see there's a lot of trades. So, these are good ideas.
Did you start with 300,000 there?
Hmm?
I was looking at your portfolio value and your available cash and,
I think I did them all starting 100.
oh, really? Okay. Wow. Really up.
Yeah, this one's high volume though. I mean, but what is that like 20-ish a month?
Okay. Yeah.
Probably more because we're not even into July yet, but it takes a while. I mean, obviously, but you got like 26 open. I mean, if you're, I'll just spin through these. There we go. 253. So the other thing I'm doing with those trades, I'm going to do like more level risk because before I do a minimum of 1,000, so I'm just going to shoot for like 2,000 per trade and like
Okay.
no more than 25. So you're not
Mhm.
going to, this is like, so this one's like double, the minimum. So I'm trying to get everything close to 2,000. So, the risk should be about 2,000 per trade to make it even more level. But I mean, it's pretty good.
Yes.
There's a loser.
Or,
This is which screen?
Keltner channel.
Kelvin, okay.
Yeah,
So this is the one that when it goes below its Keltner channel and then closes right above the Keltner channel, then you
Hmm.
open, right?
yeah.
Okay. Do you know what your offhand number of days to close average is?
No idea.
Okay,
No idea. That that's not an easy calculation for. I mean, if I get in a spreadsheet, then I can like have to manually do um, the calculation.
right.
But you can see like just here, like 9. So this one's 3 months. This one's 2 days, 2 months. 2 months, 2 months. A couple weeks, 2 months. There's a month. So, it's kind of all, there's 1 day. So obviously I'd plan for a month or so.
Yeah, and this is during a tough market, you know? Where it's range
Yeah, I mean,
bound.
this is what, I mean,
That was September of 22.
this started right here.
Yeah,
That's from here.
yeah.
Yeah. So you
And
might
you-
have been a little scared here.
Yeah.
So
So
Yeah,
do you, are you doing like 90 days on your expiration?
yeah, well, I'm doing I think minimum 60, so at least 60 days out.
Right, okay,
Yeah, so that one's been, and we'll see how well, because this is the newer strategy, so I had them populated back to 2018, so I can, do it year by year. Just want to make sure, things aren't like, one hit wonders.
right.
Um, like this one. This one's above like the risk, but you have one, so you have like one trade that's above risk that'll like drop you down. So I'm not even gonna include those.
Yeah. Looks like your win rate is pretty good.
Yeah, you only had 2. I got some open trades, but only had 2 losses there out of 21. So it's, controlling the risk,
Uh-huh,
and you got some open trades here.
yeah,
But, like things like this, I'm not gonna include because it's, 4,000.
right.
Just try and do like a level risk, give it a accurate.
When I get one of these on the studies that is based on the strikes recommended is too high of a risk because I do everything level risk.
Mhm.
I don't, it may be too hard to do in this study, but I just narrowed the spread.
Yeah,
I moved the short strike further out of the money because the long strike is already at the lower standard deviation.
right.
And sometimes the recommendation comes in, you're almost 4 or 5 strikes apart. So to get to level the risk I want to get to, I can take the short strike further out of the money.
Right. I'll show people real quick what he means. So this is the low risk one, but that's a bad example.
Yeah, the ones that are high risk usually are pretty wide
Yeah,
because the recommendation is taking the short strike just right at the money or just one strike out of the money.
yeah, those are terrible examples. Trying to find a high price one.
Yeah,
There we go. This would be it. So this one's like $3,000, right? And this is what he's talking about. So you're selling right below the close, 446, and you're buying right above the one standard deviation, it's 392. So he's buying one above 400. So what you're saying is you just like drop it down.
yeah, I just drop it out of the money until it gets to my flat risk, what I want to take risk per trade.
Yeah,
Because then if you did it exactly per the recommendation and that was the one that failed,
yeah,
that's when that whole, that it'll take out your whole
Yeah.
metrics.
right. Yeah, it's a great idea. Yeah, so then you get down to like $2,000 and risk reward.
Yeah.
Another thing, like I cleared everything. Like this, we shouldn't be, like the return percentage. I put the minimum at like 35 for the trades that we have. This is obviously different because it's a different strike, but in here, it shouldn't be below, I'm just checking my programmer's work. So it shouldn't be below 35. Because sometimes we'll get like wonky stuff where it's like, that doesn't even look right. It's like, 27. I'm like, you wouldn't want to take that trade. So we also filtered that in where it's not going to be a bad trade that comes through to you guys. But, as you go down, obviously your reward, as we just showed there, is going to go down. Okay. Anyone have questions on that? I think it's a good idea, especially if you want to take the trade, you don't want to, obviously keep your risk level. That's a crucial point, or, just pass on the trade. So. All right. All right, Joe. We ran long.
That's
ready?
good. That's good, Josh. Getting into the platform like that, I think.
Okay. I'll give you a control here.
I will grab it just for a minute. Let's see. Few charts, and there's the new UI. So as you know, we're still working on this thing. I didn't pull up a lot of charts today because obviously it's a sideways market. A couple that I did started with TLT, and going back, TLT is now in state 8 as of yesterday, and it's saying, we get 4 or 5 weeks possibly in state 8. So hard to say what is next, but I think at least bears watching. So we've got TLT in state 8 now, and TLT is basically the 20-year, and then I think the corporate symbol that we track is also in state 8. So we'll see. We've got PPI numbers tomorrow, and what the heck, PPI, they're looking for I think year over year 2.4% increase, core at 3.2. So we'll see what happens. And the 10 years backed off a little bit, as Josh has been talking about for how many months. 3.5 seems to be the magnet. We've gone from 3.35 I guess last week up to about 3.55. We're back down to 3.45 now, but I think just maybe keep an eye on TLT since it just rolled into state 8 might be useful. The The other chart I want to pull up is just the dollar, and that's the dollar going way back, you know, the dollar index. And there are obviously a couple choppy pieces of data here, but the point was just to have a long-term perspective. And we keep hearing about the dollar's dead, it's getting crushed, you know, yada, yada, yada. And, you know, the chart doesn't suggest that. Yeah, we had, you know, a heck of a run up, and it looked like, you know, when I did just kind of a quick look at this, you know, the last few runs have run about 18 months, you know, before we get a correction. Obviously, you know, we're in the throngs of the correction. I do think it's worth, you know, maybe just keeping an eye on these couple lows here. I mean, if they start to hurt the dollar again, okay, maybe something to talk about. But, you know, at this point, I think it is just, you know, it's in a fairly constructive pullback, and, like the rest of the market, sideways. That was another one. You know, we've talked about the ETFs, talk about a trading range. I think last week we were 9 bullish. We are 6 bullish, 5 bearish this week. So, you know, just kind of neutral there as well. But the leadership has been XLK, as we've been talking for some time, well above state 3. So I thought it'd be worth just taking a peek at that once again. But then in XLK, darn near 50%, I think I mentioned this before, is Microsoft and Apple. So, you know, both of them have obviously been on a tear, but I thought interesting to look at both based on the targets. So Microsoft, you know, basically, you know, has exceeded that target 3 and just kind of laying there at this point, you know, after their earnings. And Apple, as you'll see, is coming up to the targets now. So, you know, what comes to mind for me is just, you know, maybe, and hard to say, you know, kind of looks like we're just going to continue sideways, you know, with the market. The whole idea of the debt ceiling that Sudhir was talking about, I find it hard to believe that there won't be some last minute compromise. If they come to one, can that, you know, be an impetus for the market to run? You know, potentially. And I think that, you know, one of the backdrops for a market running are where the earnings have come in. So, but, you know, as far as the charts here, I just think Microsoft target 3, Apple target 1, a little bit of natural resistance. So where it kind of takes me, and this obviously has been leadership, where might the leadership come from going forward? Got to do some homework on that, but I'm wondering if, you know, the XLK maybe has kind of run its course for a while here. But back to earnings. So, and I think, you know, it's basically Refinitiv and FactSet are the 2 sources that I look for. And through last Friday, this Monday, 85% of the S&P had announced, and depending on the source, it was 77 or 79%. So let's say 78% of, you know, those S&P 500 companies that announced had exceeded expectations. So 78%. Over the last 4 quarters, 73% have exceeded expectations. And if you go, you know, longer term, we're in kind of the mid 60s, about 66%. So we're at 78%, with 85%, you know, having already announced. 63% have exceeded both in earnings and revenues. Just over 9% have missed on both. Okay, so, you know, there's the reference to soft landing, impetus for, you know, the market to break out. The earnings numbers are good. So, you know, if we're going to go higher, maybe that is the catalyst to get us going. Time will tell. So that's all I had from a chart perspective today. You know, for next week, I think try to figure out where leadership may come from, which you know, I think is always a little dicey. But any comments or questions, please? And if not, you know, we'll see what PPI does for us in the morning.
Say, Joe, this is Dave.
Yeah, dude.
A question, and then I was looking at the FactSet stuff too. I'm trying to figure out where to go to get on the website to get like latest and greatest data. I get something to my email sent from FactSet because I kind of like requested it, but it was May 5th, which was the day that
Right.
Apple reported actually. And at that time, they were projecting the earnings to be down for the second quarter, second contiguous quarter here from the year-over-year numbers from last year, which is not what you were just reporting. You give us different time segments.
No. Dave, expectations going
Right,
into
right.
this quarter.
And I'm talking about the actual earnings of, this year Q1 versus last year's Q1. And the same
They're
thing
lower.
from last.
They're definitely they're lower.
Yeah, they were lower. They were lower. That's kind of my point. But they say revenues were up. And like you say, beating expectations, it's like, well, okay, what are the expectations are for, that's kind of like whatever analysts are guessing at. I don't know. I kind of look at, well, what were the real earnings compared to this quarter and last quarter to a year ago quarter, and the real earnings, not against the estimates, but what the real earnings were and are. And yeah, they're kind of earnings are going down and revenues are going up, which kind of it reflects the current inflation kind of picture, because that's how they're beating. They're raising prices, but their unit sales are not as good as last time. But so revenues are up, but earnings are down. So but that was, there's still a couple, and they said that was the blended rate. I think that includes all those that have reported in, and then the ones that haven't, they're using the estimates as the best case for, guessing at what might happen to be in, for the rest of the year. And of course, they update that every week or so often. But I haven't figured out how to find out what like today's FactSet numbers are. I just get the email from whenever the last time they sent it out. That's one thing. The question I wanted to ask though is there like a, regarding the dollar, is there like a VIX for the dollar that can show the volatility of the dollar? I'm a little surprised to see it not moving so much with the debt limit, ceiling getting closer. That's my point.
I don't know, Dave. It wouldn't shock me if there were, but I don't know the product. I'll take, I'll look around and see. I'm not sure.
Yeah, it may not even be a product, but just like somebody that guesses at it. I mean, you might not be able to like use it to invest in or make a bet on, but somebody might have something to. Yeah. So yeah. Anyway, it'll be interesting to see another couple weeks to play out. It's sideways action, like I think you've been saying. That's what I'm seeing too. So.
Well, back to your comment about the earnings, and I think we've talked about this before in terms of the expectations. It's such a damn moving target, and I just, there's so many numbers out there, so sometimes I just don't go through too many of them. But one of the things that I read first week of reporting, I mean, earnings still year over year are down. Okay, I think the expectation was for, down about 5%, 6% in real earnings. But if the last 15% of the S&P, come out and they continue on this upward trend. And by the way, another thing I read was the average earning beat has been 7%. If that continues with the next 15% of the S&P, we might not be down in actual earnings year over year. So, they're just, you can get crazy. You can get crazy reading this stuff, and then kind of making it an investable point, which is, I think, why we talk about it.
Yeah, I agree. Yeah. Mm-hmm.
Well, nothing else from here, Josh. And
Yep.
As always, thanks everybody for joining in.
Yeah, thanks, Joe. Anyone else got anything before we close up? Questions, comments? All right, we'll close that up. Thank you, guys. See you next week.
Thank you.
Thank you.
Bye-bye.